QuantumScape is developing innovative solid-state battery technology to help the electric vehicle industry grow to a larger percentage of overall vehicle sales. The company's made big announcements in recent months, making a huge deal with the VW Group that's going to have positive implications for QuantumScape stock investors. All that being considered, is QuantumScape stock a buy right now? I'll answer that question as well in this video, looking at the company's latest developments, comparing it to its market capitalization and the cash burn rate with the expectations of future sales to determine if investors should take a chance on this innovative growth stock before it really ramps up production. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the biggest thing I want to start with is the agreement with VW Group. On July 11th, QuantumScape announced a landmark agreement with PowerCo, which is the battery company of the VW Group. They forecast that this capital-light licensing agreement lengthens their cash runway into 2028, which is an extension of 18 months relative to their previous guidance. In other words, this gives the company more time to use the cash they have on hand to meet milestones and hit targets. Previously, they were not intending to have this much of a capital-light business model. If you've been following my channel and you know one of my investing frameworks to consider is whether or not the business is asset-intensive or asset-light. The capital light or asset light business model is substantially less risky because you're outsourcing the most cost intensive parts of the business. And while that might have some downsides, overall it makes the business less risky. And when you're a newer company like QuantumScape that hasn't yet proven itself, that's so risky already because you're developing innovative technology. Your risk profile is already through the roof. So to be able to have an opportunity to substantially decrease your risk profile, I think is a huge win for QuantumScape stock investors. And to do this with VW Group, a company with the manufacturing capability at the size and scale of VW Group, I think it says a lot about QuantumScape. This was a really big win for the company. And I've been following QuantumScape for several years now, and they've been making solid steps forward, hitting milestones, developing technology, getting their tests approved, and they're flying these tests with flying colors in comparison with the current technology that's out there for batteries for EVs. QuantumScape's technology looks to be far superior. So this deal consists of two major elements. First, it creates a dedicated and co-located team of experts from PowerCo and QuantumScape that will collaborate to industrialize their solid-state battery technology. Then the second component is the non-exclusive tech licensing agreement. So contingent upon satisfactory progress, QuantumScape will receive a $130 million prepayment of royalties and grant PowerCo a non-exclusive license covering initial production of 40 gigawatts per year with an option to expand to 80 gigawatts, which would be enough for approximately 1 million vehicles annually. So very positive deal here for QuantumScape. I would have preferred if this $130 million prepayment was not contingent, if the company just got this money just for agreeing to enter this relationship, but then we would be getting picky here and wanting the best of both worlds. It's already a good sign that QuantumScape signed this deal and gets to have that capability in place. So once they develop their technology and it's ready to go, then they can outsource the production. They can license that production to the PowerCo and not have to do all of that itself, which would have required significant capital investments to build out those manufacturing facilities, which would have also added significant risk because they didn't have any experience doing that. It's a brand new company developing this technology. They have a lot of experience in research and development. They've been doing that for a lot of years. That's where their expertise lies. So going into manufacturing, it wouldn't have been optimal if I was a QuantumScape stock investor, which I'm not. I don't own the stock. But if I did, I wouldn't want them to go down that route. I would have want them to go down this current route, outsourcing the technology, outsourcing or licensing, royalties, whatever you want to call it, just not bringing it in-house where they have to do all the manufacturing as well. Now, this also brings down the upside for the company, but that's okay because there's already so much upside that you're okay giving some of that up to reduce a lot of the risk, because the risk is so high with this company. You're willing to give up a little upside to bring down that risk substantially, which is what QuantumScape did here in this deal. So they've shipped their Alpha 2 prototype cells to multiple customers in the automotive and consumer electronics sectors, and they continue to work closely with their customers for the QSE5 cell. Now, they've started talking a lot more about consumer electronic use cases for their battery. A couple of years ago, this was primarily, most of the discussion was for electric vehicles. They were kind of hinting at the fact that it could be useful for electronic devices as well. So that's an interesting additional upside use case for QuantumScape that I'm looking forward to hearing more about, how these tests come out, what are some of the specific use cases that they are evaluating. And then this year, their production of Raptor will enable low-volume B-sample production of their QS5. And then next year, what they're calling Cobra is the key to their higher volume QSE sample production next year. So this is necessary for them to get this, send it out to the prospective buyers, have them test it out, and see what works, what doesn't work, what feedback they get, what they need to change before it's completed and ready to go into full production. So this is good that they're making progress on this, hitting these milestones, getting these agreements. So one noteworthy result from their testing is that they're demonstrating thermal stability up to 300 degrees Celsius when you test conventional high-energy lithium-ion cells. Those burst into flames between 174 and 185 degrees Celsius. So a design that can offer this higher energy than conventional energy cells while remaining stable at high temperatures would enable automakers to make their battery packs smaller, lighter, and more cost-effective. That's the big key here, more cost-effective. That's been what's holding back the EV industry. Is not only is it incredibly more inconvenient with the charging, but it's also more expensive. And so consumers are just asking themselves, why in the world would we get an electric vehicle if it's going to be more pricey and more inconvenient simultaneously? It just doesn't make sense for the vast majority of people. For over 90% of people, electric vehicles don't make sense with the current technology. That's why QuantumScape could be such a big key for the development of electric vehicles if it can bring that equation to more favorable levels where the charging is not so inconvenient, the time to charge is lessened, the range is longer, the dependability is better, and then at the same time you're getting lower prices. That makes the equation a lot more favorable for consumers, and I wouldn't be surprised if that lifts auto sales for electric vehicles. So all that being said, does that make QuantumScape stock a buy right now? Well, it's trading at an enterprise value of roughly 1.9 billion. That's down from an enterprise value of over 15 billion it was trading at in 2022. But I argued it should have never been trading at that valuation to begin with. Many electric vehicle related stocks were trading at astronomical valuations in 2020, 2021, and early 2022 that should have never reached those levels. And I had been making videos, writing articles, warning investors not to touch those stocks at those astronomical valuations. Hopefully you didn't get caught up in that enthusiasm and hype. At a $1.9 billion valuation, it makes a lot more sense. Although the risk profile is still elevated, it's down a lot, but it's still elevated. If I was to answer if QuantumScape stock is a buy, hold, or a sell, I would keep it rated as a hold, although I will say it's approaching very close to a point where I might upgrade this stock to a buy if they keep going forward like this, hitting these milestones, signing these deals. it's not long before I think I can upgrade this stock. They've done an excellent job. Kudos to management. They've made great decisions with how to invest the capital they have. They didn't waste the money they had on hand. They've made great progress on research and development. So I've liked where this company has gone so far. I think there's a little more to go though, and I will likely upgrade this stock if they stay on this path. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.